Okay, good evening, traders. Welcome to this webinar. It's about the signalTrader Forex trading system. I'm Paul Clevitt. I built it over the last couple of years. It's been quite a journey. So I'm going to just do some legal stuff that I need to do. The Forex market is a huge market. Trillions of dollars are traded every day. It's very volatile. It's very, very difficult to trade. Traders must be disciplined and stick to a trading plan. Failure to do so can or will result in some or all of your balance. The Forex markets are not like anything else that there is really. They are incredibly risky to trade, and many people lose money on the Forex markets because they are so difficult to trade, and it requires an incredible amount of discipline, and hopefully this system will help with that. So just going to warn you, this is not an easy thing to do. Okay, Forex trading is not an easy thing to do. If you want an easy thing to do, put your money in the bank and earn 1% interest. The thing about the Forex market is you can actually earn quite a lot more money than you would if you put your money in the bank. But of course, that comes with higher risk. And there's a lot of things going on in the market. And this system is actually there to help you to trade. So we'll get through that. So that's the official warning. It's very dangerous trading the Forex. And everything you do is at your own risk. If you see something tonight and you place a trade on it, that's your risk. Everything is at your own risk. If you allow the robot to trade on a live account, that's your risk that you're taking. Okay, the software is for educational purposes only, and any trades that you take are your responsibility. Okay, that's that done. That's the legal bit out of the way. So I put this title, "The Holy Grail of Forex Trading?" ? So what do you need to actually, because we've got some basic beginners in, I'm going to do something else first. So basically, Forex trading is about trading currencies, and it works like this. Let's say we live in the UK, and let's say we've got £100 sterling, and we take £100 sterling, we fly out to the States, and we buy $100 in the States, and we don't spend any money because we're really a bit of a skinflint, and then we fly back to the UK with $100, and we then convert our $100 back to sterling. Now, while we were away in the States, the dollar has become worth twice as much. So when we sell it back to them, we've then made £100 on the £100 we've had. And that's basically the way it works. We're basically working with fluctuations in the prices of currencies. It's slightly more complicated than that because we have things like leverage. So actually you can trade with 5,000 US dollars when you actually only physically you're basically borrowing the 5,000 US dollars and giving it back again at the end of the trade. So the signalTrader Forex trading system started off as a congestion trading system, and a congestion breakout trading system works by looking for where the markets stand still or don't move very much, and then wait for a break from that, which all works very, very well. We're doing really well with it till about Christmas, when the markets changed their behaviours, and the breaks weren't so big. In fact, they weren't big enough to actually make a longer trade for, and it became very difficult to do that kind of trading. So then it's kind of evolved, and with the trader feedback and moving away from trading short time frames, and we've kind of ended up where we are now. So it's quite a sophisticated trading system. Now, a completed trading system would need to calculate support and resistance. That means whereabouts is the currency pair likely to bounce. Stop loss, that is, when am I going to say, actually, I don't want to be in this trade anymore, it's going against me. I think if it's going this direction, I'm going to have to stop out. I'm going to have to get out of this trade, even though I'm going to make a loss. Take profit. Where am I going to say, okay, the currency's reached a certain price, I want out of this trade, I'm going to take my money and run. We need to be able to calculate the direction of the trade and the trends that are going on within the marketplace. And I'm going to show you all that tonight. So don't worry too much if you don't understand what I'm talking about. We need to manage our trades. We need to move our stop losses around to protect our trades. And it's useful to have information coming via email about the current trades in progress and other information you might need during the trading day. Okay, what's the next slide? Okay, we'll come back to that in a second. Now, this here is part of the signalTrader Forex trading system. Now, basically, for those of you who are complete beginners to the whole trading thing, I'm going to just move this over. Oh dear, I'm going to move it over there. Come on then, over you come. Right, so for those of you complete beginners, basically this is the New Zealand yen pair. You can see it up the top there. That's not helpful, is it? Doing it in grey on a black screen, right? New Zealand yen. Let's try white. Okay. So New Zealand yen is here. Okay. Now that means that the New Zealand dollar, we're buying the New Zealand dollar and we're selling the Japanese yen if we're going up. So what we're saying is if we're going in that direction, we want the New Zealand dollar to get stronger and the Japanese yen to get weaker. However, and that's called going long or buying the New Zealand dollar versus the Japanese yen. Now, let's go the other way. If we're going this way round, okay, we are selling the New Zealand dollar and buying the Japanese yen. We're basically saying we want the Japanese yen to get stronger. Okay, so for instance, if I was to open a Forex trade at this point and I was going to sell the New Zealand dollar and buy the yen, and then I close my trade here, this would be my profit. Okay, would be the difference in the two prices. So that's basically how it works. Okay, now let's start looking at some of the things that are on the screen. It looks quite a complicated screen. It is complicated, but Forex trading is a complicated thing. But actually a lot of things, in fact almost everything you need to know, is actually calculated by the signalTrader Forex trading system, and then it's acted on by the robot. Now this thing here is a currency heat map. So basically the greener it is, so look at this bright green, you can see the Swiss franc is almost all green. Okay, in fact sterling is completely green. What that basically means is that the green currencies are the strongest ones and the red ones are the weakest. So, and at the end here, these numbers, these are averages. That's 51%, 42%, and that we're comparing all the currencies against all the other currencies. So anytime you can look at this and see just about how well a currency pair is doing against another currency pair, or how well a currency is doing against all the other currencies. Down here, this here is called the signalTrader Massive Indicator. This blue line here, blue shaded area here is market participation. And what that means is when it gets low down the bottom, it means that there's not much going on in the market. Okay. When it's higher up, obviously, it means that there's more market participation. And at different times of the year, we get more market participation. There's been a real drop-off in it. Now these lines here, each one of them represents a currency. So the blue line here is the New Zealand dollar, and you can see the New Zealand dollar lost strength over the last few days. Each candle, these are called candles, each one of these is a day. So the blue line here, as it lost strength, but it's regained a bit of strength, and that's the New Zealand dollar. So as you can see, when the currency pair came down like that, so the currency strength came down against all the other currencies. And over here we've got the Japanese yen, and you can see it got stronger against the New Zealand dollar. So the New Zealand dollar got weaker and the yen's got stronger. What's happening now is, okay, you can see that the New Zealand dollar actually got a bit stronger, got weaker, and is starting to look like it's finding a bit of strength. And the Japanese yen has just gone a bit flat, and there is a reason that because the Japanese are on holiday at the moment, so that you won't get a lot of movement. And that's one of the reasons the markets have been completely flat. And I know a couple of you who are using the system complained there were no trades today, that the robot didn't take any trades, and there's a reason for that. There was nothing in the market for it to trade. Okay, now I'll come back to that just shortly as to why it didn't trade, because there were two trades it was looking at that it didn't take. So let's have a look at some other things. Now there's a signal line here. Okay, now that is a 50 period moving average, and if you don't know what that is, don't worry about it. Basically what we do is we sell currencies below it and we buy them above it. So in this case, we would look to, so from this point here, we would look to only to buy New Zealand dollar yen. Okay, when it came against us, when it started moving down, we wouldn't take a short until it actually got below here. Okay, and you can see signalTrader Forex trading system actually pinpoints where the stop loss would be. So it calculates the stop loss. If you look here, it says the stop loss is about 60 pips, and it gives you the price and tells you what it is. Now that's dynamic, so it constantly moves around with the currency pair until it places a trade. So that's the stop loss. Now then we've got some other lines going on here. Let's just move the chart around. Okay, come on, move around. Right, so we've got some other lines here as well. It calculates support, okay, which means that these are likely places that it will bounce. And lo and behold, you can see here it has actually bounced off this point here. And the Forex market doesn't move like that. It doesn't move in a straight line. Okay. And that's a news feed. Come get out of the way. It doesn't move in a straight line. It does this. Okay, so the theory is, if you could get into a trend, so in fact we can see it here. Look at the way it comes up. It's not very pronounced really. Maybe I'll find a sterling pair, because sterling will be very pronounced. Okay, let's just close that. Sterling will be much more pronounced in the way that it. So basically, this pair, you can see it comes up here, pulls back, comes up, pulls back, comes up, pulls back, and it's very slow at going up. If you look at, let's move to a GBP pair. These are the chart controls down here. This isn't normal for the MetaTrader 4 system. Okay, these are plugins for MetaTrader 4 that talk to an external server. So let me just select chart GBP USD. Hopefully this will help me out. Yeah, this is a bit more violent. Sterling tends to move more than other currencies and obviously costs more to trade. So we've got a long run up to here. You see the way it pulls back to here, comes up, pulls back, comes up, pulls back. So because it's above the signal line, we'd want to take the longs. So signalTrader will be looking to take a buy here and then close it here. I know that goes on ages, but we don't know it's going to do that because we're out of uncharted territory. Buy here, close it there. Same thing here. So buy there, close it here. Now it would know how to do that because of this. When the signalTrader massive indicator crosses, when we go to cross, this is the gold one is sterling, and the blue one, light blue one, is the dollar. When we get across, the signalTrader trading system says, okay, what's the strong one? Sterling. What's the weak one? The dollar. Okay, I need to look for a buy. So it'll look to take a buy here. Almost as if it predicts what's happening next. Up we go. Okay, now some of these trades can last for days and days on end. I had one last week that lasted about 5 days before it took profit. Because we're into longer term trading. We're not into sitting around. We're not into a 5-minute 30 pip trade. I'd rather get 150 pips. Now there's some other things going along the top here. Firstly, where it says targets long, and you'll notice the longs in square brackets, that means that the signalTrader system is going to take longs, not shorts. Oh, sorry about that. Drew a little line where I shouldn't. Okay, let me just turn this off so I can move that out of the way. Right, so, okay, so we've got, it wants to take longs, not shorts. Okay, so although it's telling you the short is not interested, it's saying that the stop is 44 pips. It's saying that it's good to go. That means that if the signalTrader trading system right now sees a long, okay, here, if these two cross, it will take a trade. Okay, but they're not crossing at the moment, so we need this to confirm it. This is basically a combination of momentum and currency strength, and momentum means that the currency pairs are going to go in the right direction for us, and that there's some strength in the market to do so. At the moment, today, there hasn't been any strength in the market to do anything. You can see actually for the last 3 days, it's been absolutely flat. Nothing's gone anywhere. So the signalTrader Forex trading system, the robot will stay out of the trade. He will not be looking to take the trade. When we take the trade, he'll be looking to take a long up to here. But today it's been going down. You can see it's been going against the trend. I'm expecting to bounce back off the support. That's that one there, and then head up to the TB. But it certainly isn't going to be today. Because there just isn't anything in the market to do so. Probably because the yen's on yen. Japanese have got a day off, and there wasn't much news. So often news will be the catalyst for things to move in the market. So you can actually see things changing. You can see some of the numbers changing. The other thing it does is, which is not very visible on this, let me just flip to this one. Okay, here's one that's a bit more visible. So here's one we've got sterling New Zealand. So remember, we're buying sterling and selling New Zealand dollar. So the first one's the buy, second one's the sell. So if we're going upwards, we're buying New Zealand and selling New Zealand dollar. If we're going downwards, we're selling GBP and buying New Zealand dollar. So back to here. So where's the market? Actually, it's kind of floating around the middle, but the signalTrader Forex trading system hits the signal line's in the middle, but we're looking for buys out of it. Okay, and you'll see that the first target is 114 pips away right now from the price right now. Here's the price now. Okay, now you will see if the market was moving around a lot, you'd see this thing flashing like traffic lights, going bananas. So there's no orange, only green and red. And you would see you would see the numbers here changing. Okay, you'd see if it was moving up quickly, you'd see that going 114, 112, 110. So it shows you that, and the same thing for the stop loss down here. You would see, okay, it's got 154 pips. So let's say it drops suddenly down there. In fact, if it comes below this line, signalTrader trading system will look for a short. That kind of makes sense in this kind of, look at the way it's been bouncing up and down. However, okay, you can see that this is quite a difficult trade to take, isn't it? Look, you see the bottom of it is there. So it's got quite a strong support that's not going anywhere. And it's got resistance that's making higher highs. So it may be that we're actually going to break out up that way. So this is quite a difficult currency to trade because it's pretty flat. What we call flat. Flat means that it's not going anywhere. Okay, if someone says that they're flat on all their trades, it means they haven't got any trades on. But if they say it's a market is flat, it means that the market's not going anywhere. Here's another one. Look how boring that is. In the old days, this was one of our congestion trades, and you can see the problem with it. Look, even though it broke the congestion, it never went anywhere. Just went straight up, poof, came down again. So that's why we couldn't carry on doing congestion trading. Just the market's changed, so we couldn't do it. In this case, look, we've got it's looking for a long. Our next target is up here, which is 76 pips away. Our ratio is 2 to 1, so we're looking for 1.5 to 1 times risk to reward. So that means that if we win a trade, we will make 1.5 times our risk. So then if we lose a trade, then we only lose half of the risk. It doesn't really work like that, but it's easier than trying to explain it. So we're looking for that figure to be above 1.5 times, and then we'll be interested in taking the trade. But again, it's quite a flat market. And you see how exact the signalTrader is with its sell, its stops. Very small stop here. But again, I expect this to come down, bounce back off, and carry on up. Look at the signal line. It's going that way. Look at the 200. That's a longer term. That's a 200 period, 200-day average signal line as well. Now, let me show you something else. Let's look at it weekly. Look at what the weekly's doing. Do you want to sell that? You want to take a short on that? I certainly don't. Okay, there's a nice target sitting there, but you can see the way weekly it goes up, comes back, up, back, up, back. I don't want to take shorts on this trade, the currency pair, because the pressure is bullish. That means that if we get a false signal, which sometimes happens, sometimes down here you get a false signal. I don't know if you can see. Oh, here's one. Look at this, right? That there. So here we've got a signal for a short. So in fact, signalTrader wouldn't have taken it anyway. So yeah, the Swiss franc became, yeah, so signalTrader wouldn't have been interested in that. It would have been interested in this one anyway, up to there. However, if we would, sometimes you get them where they do this. Oh, there, here you go. See that there? So if there was a conditions for a trade and we get this funny running backwards and forwards, we're only going to take longs. Okay, that's one of the reasons you might get stuck in a trade for a while. We're only going to take longs because of the participation in the market. However, let me just scroll back and have a look at that one, because yes, you can see it was that about 6 days. Let's just pull this back here, see what's happening. I'm just thinking out loud while I try and find it. Where is it? Where is it? Where is it? Here it is. So it's this bit here, there, this part here. You can see that you've got, it's looking for bullish trades. So it will look to buy, but I suspect that its stop would have been here at the time, guessing backwards. So it would never have taken this long trade. It would definitely have been interested in this long trade here. Probably have entered it about here or somewhere there. It would definitely have entered it there because it wouldn't have entered it below the signal line. Look at the target. There, it goes straight to the target. Okay, goes straight to the target, being over 1, 2, 3, took it 5 days to get there. Okay, that's 5 days of going up and down. Look here, it almost came back to where it started, and it made it to its target. So that, you know, and this is one of the problems with the markets these days, is they're slow. They're not as fast, and you know, this kind of rally is quite unusual, because there isn't the market participation. Partly that's because of the time of year we're in, because we're in coming into the holiday period, and people tend to be sort of off on holiday. So let's look at another one. So here we go. Here we've got a short. You can see that the signal line's down there. Look at the way it's bounced. bashed off the signal line and carried on. So if it had broken the signal line and gone long, it would have broken out of the trend. Now let me show you something with this one. Let's have a look at the weekly chart. So you can see it's in a big long bearish trend, isn't it? That way. And look how accurate the signal line is at pinpointing where the trend is. Now, of course, the good news is it could take you absolutely, you go mad if you tried to analyze all these charts all the time. The good news is you don't have to do it, okay, because the robot does it for you. Okay, so here we go. So basically what the robot does is it does all this analysis for you. And to summarize what it does is it first of all looks for the correct risk and reward. So for instance, it would look for at least, see this one, it won't take it. Risk to reward's too small to actually take the trade, and rightly so. There's only a 24 pips to the next target. If we broke that, it would be looking for the target above it. Okay, so let's just flip chart, change charts. Okay, so here's one that might actually happen. Okay, is it going to happen? No. Look, tiny risk to reward. So it keeps, the robot will actually keep you out of that kind of trade. You just don't want to be in it because it's not going anywhere. Okay. However, if it breaks that, look where it's going. 129 pips. That's much more exciting, and so that's what we'd be looking for. So you see the robot. So the robot looks for that kind of setup. It looks for a setup where there's 1.5 to 1 times ratio there. Then it holds out and it doesn't take the trade until the streams cross. So we've got the momentum in the market, we've got the trade set up, and then we're ready to go. And that's why we haven't got a lot of trades on at the moment, because the markets isn't really moving that much. However, I suspect that tomorrow we will get the move in the market that we're looking for something to happen. However, at the moment, oh, look at this. What's this? Oh, this is one I've had a look at today. Aussie, New Zealand. These two. Now, at the moment, look at this. They're going down together. So the robot's not going to take this yet, but this is a good setup. You can see, look, there's loads of space. So we trade into the wide open spaces. There's loads of space there. It's basically like a wedge. You can see that there and there. So the robot is waiting to get a short. So you can see that short 165 pips, ratio 3 to 1. Stop is only 42 pips. So if it comes back to that red line there, we're going to be out of it. But it's more likely, what do you think is going to happen? It's going to come down, isn't it? And it's probably going to quite easily get to that 165 pips. But don't take it yet, because these two need to cross. Until they've crossed, the market is not in a place to take that trade. Okay, we need it to confirm that it's actually going to do this, and it's not just going to carry on up and break out of this trend. And that's what this signalTrader massive thing does for the robot. It shows it where the markets are going to go. So you'll find there's a lot of times when you might look at it and think, oh, it's a great trade, it's a great trade. And the robot will go, no, it's not. Okay, I'll show you a couple from today, from earlier. Excuse me, I'll just get this going. View. Right, so I had the robot emails you various things, and this is one of the things that emails you. It emails you when it gets a trade which it's not going to take because the risk and reward isn't enough. So let's look at Aussie Yen short. So here, so all I have to do to select the chart is select chart, Aussie Yen, like that. Okay, so it said look at the short. There's a short on Aussie Yen. Yes, there is. It's below the signal line. What's the problem with it? Ratio risk reward's much too small to make it worthwhile taking. So that's it really. So that's how the robot works. It is complex. Okay, it's basically looking at trends and all kinds of things to work out when to place the trade. So the robot doesn't do a lot of trading. It probably last week it did like 6 trades the whole week. There's some people will die if they don't do about 5 trades a day. All right, but we're looking for big trades. We're looking for trades of hundreds and hundreds of pips, and that's the difference. And we're looking for trades to last 3 to 4 days and are far safer than trying to trade for 20 pips a go. So how'd you get your hands on this system? Oh, and there's something else I need to show you. Let me think. We also have a web interface because we have an external server or 5 I won't tell you how many servers there are sitting there processing your data. There's in the cloud. There's basically a server. How helpful. Okay. Right, www. Right, let me just log into the website. So basically, there's a secure website area. Oh, sorry, wait a. Oh, how helpful. Sorry, I'm just going to type the details in. I've got this huge long password. There we go. Right, okay, so basically this is the website. So this is showing me, there's those rejected trades I spoke about, and you'll see that it's got the stuff in there, but also got some settings for the robot. You can limit trading to, these are basically the most volatile hours, and some traders like to be out of them. I personally don't care, I'll just trade right through it. And I always have them in aggressive mode, and then you can turn the robot on and off from here. So and there's the news is down here as well, so you can see, as you can see today, there's no news until 23:25 tonight when the Aussies are speaking, but it's not even serious. Let's have a look at tomorrow. 3 o'clock in the morning, we've got something far more serious. The that pink one, the pink ones are the very serious ones. US CPI tomorrow, that can move the market. We're not that bothered about it moving the market. There's only 2 events that we really worry about, and that one of them is non-farm payrolls, and the other one is when the FOMC speak. They tend to break things, and you get huge whipsaws. And what a whipsaw is basically is, I'm just trying to find one. Basically, what happens is that let's say the market's trundling up like this, and then a whipsaw will go like that. So that means anyone who's in the long will probably TP or stop out, or TP or just bounce straight back down and stop out, and then it'll carry on up the way it was going. That's normally caused by speeches and things like that, or surprise news. For instance, if they say, well, we think there's 57,000 people unemployed in the States this month, it's only gone up by 57,000, it comes out at 265,000, that will move the market. Okay, and it'll be unexpected. But hopefully, if your stop losses are set correctly, then you should be all right with that. Okay, it's a really difficult balancing act. Okay, so I'm going to open up for questions. Has anyone got any questions before I wrap it up? If you want to get hold of the software, you can get the details from www.iwanttobeaforextrader.com. That's up here. Just go there. I want to be a forextrader.com. Scroll down the page. There's all the details of how you can get hold of it. There's 2 ways of getting it. You can get hold of it by opening a live account with Bill4FX, who are a broker that I use through my website, so that I get commissions basically. And then you just send me the live account number, or you can just buy it outright to run on any broker who's running MetaTrader 4. You might want to check with me first, because some brokers are a little bit slow, and we need the data to come in at a good, reasonable speed. There is 1 or 2 brokers who are abysmally slow at processing all trades and things like that, and you need something with a reasonable speed. So again, you'd buy the software. If you need if you need me to install it, we can install it for you. We can log into your machine. If you're going to run it, if you run the robot, you really want to run it 24 hours a day, 5 days a week. That's Monday to Friday, or Sunday night to Friday night. Only because it needs to have all the time to actually sit there and analyze the markets and get you the best entrance. And that, if you've not got it running, of course, it can't place the trades. So, anyone got any questions? Let's see if there's any questions coming in. Let's think if there's anything I'll show you. I think you can use the question box. It says I've got 2 questions. No, they're questions from before. So that's basically it. If you want to chat further, you can chat through the website. You can just go straight to the website. There's a chat box there. Or you can email me, paul.clevitt@dailyforextrader.me. That's CLEVETT. I think I'm going to call it a day there and end the recording. So I'm just going to end the recording now. So it's iwanttobeaforextrader.com. And that's it, really. Thanks for coming to the webinar.